Rounding up our last session before the break, we have Jared with Fundera, and Jared, your company, Small Business Financing Marketplace. Let's welcome him today.
Thank you. Thank you for having me. My name is Jared Hecht. I am the co-founder and CEO of Fundera. Fundera is a small business financing marketplace. We connect small business owners who are seeking credit with the best funding provider for their business. You can kind of think of it analogous to Priceline or Expedia for small business loans. We have a primary focus of connecting small business owners with alternative or non-bank lenders. A lot of those lenders are here at LendIt, like Funding Circle, OnDeck, DealStruck, SmartBiz, etc. We started Fundera because there are some really big problems that exist. Most of you know what these big problems are. The first one is that banks have been unable to meet the credit demands of small businesses. So this industry of alternative or online lending has emerged to fill the gap. The second problem is that even though we all are very, very familiar with alternative lending, the average small business owner is not. And very few small business owners are aware that opportunities exist beyond the traditional bank. And the last thing that is a significant issue is that the market is extraordinarily fragmented for non-bank credit products. This exposes businesses to unscrupulous brokers and exorbitant interest rates because they have no idea how to navigate the space. There are various loan products that are popular amongst small business owners, ranging from term loans to SBA loans, lines of credit, equipment loans, commercial real estate, franchise loans. The list goes on and on and on. And for every single one of those products, there are tens, if not hundreds, of lenders that service that specific product. So for a small business owner to actually familiarize themselves with those various products and then identify the right lender for their business requires a tremendous amount of diligence that they simply do not have time for or even know how to run that process appropriately. So how does a small business owner try to do this process? Well, they go to Google and they type in small business loans, and this is what they see. A bunch of advertisements that all say the exact same thing. And this is the experience of what happens when a small business owner gets rejected by their bank for a loan. And some of these companies are excellent companies, and some of these companies probably aren't. Regardless, the marketing messaging looks the same across the board for the most part. And this is very, very difficult for a small business owner to actually navigate. And generally, the messaging is trust us, we have 24-hour approval, money fast, low interest rates, yada, yada, yada. Whether this is true or untrue, everybody generally says the exact same thing, which makes it even more confusing. So we think the internet is fundamentally broken when it comes to small businesses discovering the right loan product for their business. And this is one of the very few areas in the internet where the internet has not actually transformed this industry quite yet. The current solutions that exist for a small business owner, or the current solutions that exist where people have actually tried to solve this problem, generally fall into one of two categories, one of which is SEM arbitrage, where people pay for leads, they take self-reported information and they sell it out to as many lenders and brokers as possible. Nobody really wins in this scenario. The second one is traditional offline brokering, where a human actually inserts themselves between a lender and a small business, and this has led to a bunch of industry bad practices. Mainly, the small business owner never knows what the pass-through interest rate that they're supposed to get is because the broker is actually marking up the interest rate anywhere between 8 and 15 points. So we think that in the future, the internet will do to small business lending what it has done to virtually every other industry, which is increase price transparency across products, lead to automated processes, increase competition amongst funding providers, and lead to better discoverability. And we hope that Fundera can play a small or significant role in propelling small business credit to the future. Our value is that we help a small business owner find the right loan and product in less than 5 minutes generally. And then we empower them by giving them the information and tools necessary to actually pick and choose a funding provider that they want to work with and then complete an application. And the way it works is pretty straightforward. I'll run through a couple screenshots of what our application looks like. This is our homepage. It's pretty self-explanatory. There's a bunch of information that should familiarize a small business owner with what we do. They complete our application, which is divided into 3 separate parts. We collect information about the business owner, we collect information about the history of the business, and then business financials. We take all that information, we run it through our matching logic, and then we actually show them which of the funding providers within our network they are pre-qualified for a loan for. Every single funding provider passes us a robust set of pre-qualification criteria across a bunch of different variables, usually 20 to 30 variables. That includes, we will only fund a business if they've been around for longer than 2 years in XYZ industries, this amount of annual revenue, and a FICO score above, whatever, 500, 550. So these are lenders that want to fund this small business. They want to lend to them. And this small business fits the checkbox of criteria that they deem appropriate or necessary in order for them to fund their business. This dashboard should look pretty familiar to other dashboards across the web. We provide small business owners tools where they can filter through the options based on interest rate, product type, repayment frequency, you name it. Every single lender has a profile, so a small business owner can dig in, they can do diligence, they can see the types of industries that funding provider likes to service, average loan size, cumulative loan volume that they've actually originated since their inception, all of that kind of stuff that would get a small business owner comfortable that they're actually making the right decision. They then select one or more lenders, and then we collect supplemental information that those lenders require in order to submit a complete application. This is generally things like social security number, federal tax ID, their personal annual income, things of that nature. They then give us the authorization to submit a fully packaged loan application on their behalf so that we can collect documents like personal tax returns, business tax returns, balance sheet, et cetera, and then submit the application to whatever funding providers they've chosen, and it goes directly into underwriting. So this is truly a one-stop shop experience for a small business owner to discover the best financing options for their business, select the lenders that they actually want to work with, and then we will submit their application. It's a comprehensive end-to-end experience, and this small business owner didn't even have to talk to a lender during this process. So a couple things that enable us to do this are the matching logic that I was telling you about that give us the ability to actually connect a small business owner with a lender where there is a high likelihood of success or at a high probability of them actually getting a loan from them if they so choose. We have API integrations and working on API integrations across the board with all of our funding providers. This enables us to submit information to a lender and then for them to submit a response to us in real time to say, hey, based on the information that we've received, this small business owner is pre-qualified or pre-approved for a loan up to $60,000 at 15% APR for a 2-year term loan. This creates much more of a real-time feel where a small business owner can actually make a better educated decision because the data that they've been given us has actually been processed and provides them value along the way. We also submit the applications to a majority of our lenders via API integrations as well, which makes the process much more efficient. And honestly, machines and computers and software can actually handle the entire process end to end. We also have a curated funding network. We believe in not having the biggest funding network and the most amount of lenders. We believe in having the highest quality. So for every single one of those products, we've tried to identify the 3 to 7 funding providers that we admire the most, that we think follow the best practices, that have the best customer experience, that invest in technology and engineering, that try and automate processes, and we try and get them onto our network. And we've had really good luck with that so far, and that's a very compelling value proposition that we pride ourselves in, is really curating that network so that we can confidently say to a small business owner that if they come to us, they will end up in good hands. And lastly, one of the things that I think this industry has benefited from is vast transparency. And I think companies like Lending Club and Prosper have really paved the way in terms of letting people know how they actually make money, what the process actually looks like, and just being totally open in terms of what their business model is. For us, we collect 1 to 3% of the total loan volume as an origination fee. The lender pays us. It's an entirely free service to the borrower. In instances where a lender wants to tack on points in terms of interest rate that they pass to the borrower at the end of the day, we will actually tell the borrower that they are better off going directly to the lender and not working with us, but we will still help them and guide us along the way. And that's something that's incredibly important to us. And we hope that we can actually automate a lot of the processes that exist in offline loan brokering and bring them online. And that's Fundera in a nutshell. And I think I'm well out of time.
We can actually take a question or two.
Cool. Yeah, so whatever they use. Oh, so you asked if the lender pays us an origination fee, and do they have to still pay a servicing fee to their own proprietary originating platform or whoever they use? So when we when we submit an application on behalf of a borrower, let's say we submit an application to Funding Circle, and Funding Circle funds that customer. Funding Circle will pay 1% of the total loan volume to us as an origination fee. So let's say it's a $100,000 loan, they're going to pay us $1,000, anywhere between 1 to 3%. That is a great question. The origination fee does vary by lender. We believe that we do not have an incentive to refer one lender over another. One of the ways that we actually avoid that is we show a small business owner all of their matches. So if we were to whittle it down and only show them 1 or 2 matches, it could be perceived as somewhat shady, or we might be perceived as actually being incented to show them everything. But when you are pre-qualified with lenders in our network, we are going to show you the full list all of the time.
Let's thank Jared.
Thank you.